Florida, the land of palm trees, golden beaches, and a ticking real estate time bomb? Beneath the sunshine and sunsets, cracks are forming in some of the state's hottest housing markets. Skyrocketing insurance, soaring HOA fees, and slowing demand are quietly rewriting the dream. Could your paradise be next to pop? Imagine paying $10,000 a year just to insure your home, or watching your property value slide faster than the tide. This isn't just a dip, it's the start of a dramatic shift. In this video, we're diving into the top 10 Florida cities that could crash first in 2025. Number 10. Fort Myers. Fort Myers used to be a hidden gem. Now it's a hotspot that's heating up for all the wrong reasons. This Gulf Coast city once welcomed over 23,000 new residents a year during the pandemic boom. But in 2025, things are taking a sharp turn. Imagine paying nearly $500 a month just for homeowners insurance. Yep, in Fort Myers, insurance premiums have jumped a jaw-dropping 245% since 2020. Back then, you might have paid $2,100 annually. Today, it's closer to $7,300, and for flood zone properties, it can top $10,000. That's not just a red flag, it's a full-blown siren. Why the spike? Fort Myers was slammed hard by Hurricane Ian in 2022, causing over $112 billion in damages statewide. Insurers fled the state like it was on fire, and now residents are stuck with fewer providers and sky-high premiums. One couple even reported that their policy jumped from $2,400 to $8,900 in just 2 years, without ever filing a claim. But wait, there's more. Let's talk about HEA fees. In 2020, average fees in gated communities hovered around $350 per month. Fast forward to today, and it's not uncommon to see fees between $600 and $900. That's an increase of over 70%, and it's hitting retirees and fixed-income households the hardest. These fees now include disaster reserve funds, flood protection upgrades, and more stringent building code requirements, all after the state tightened regulations post-hurricane. And then there's the housing market itself. Inventory in Fort Myers has skyrocketed by 54% year over year, while pending sales have dropped 27%. Back in early 2022, homes were flying off the market in just 10 days. Now, they sit for 47 days on average, and over 38% of listings have price cuts, some slashed by $50,000 or more. Migration has slowed too. Fort Myers saw a 22% decline in inbound moves in 2024 compared to the boom years. Combine all this, and Fort Myers is looking less like a tropical bargain and more like a financial minefield. The sunshine's still free, but everything else is starting to cost a fortune. Number 9. Miami. Miami still dazzles with its palm trees, Latin energy, and oceanfront living. But in 2025, the city is also flashing red warning lights for homebuyers. The median home price in Miami just hit $620,000, a whopping 45% higher than it was in 2019. But the real kicker? Insurance costs. In Miami-Dade County, average homeowner insurance premiums now exceed $10,200 per year, nearly 5 times the national average. Add in flood insurance and you're easily looking at $12,000 to $14,000 annually, just to protect your house. And HOA fees? High-rise condos in Brickell or downtown Miami often come with monthly HOA charges of $800 to $1,400, which totals over $10,000 a year, and that doesn't even include your mortgage. These fees are rising due to stricter post-Surfside building inspection laws requiring structural improvements, reserves, and enhanced insurance. Some buildings have increased HOA costs by 60% in just 2 years. Now let's talk about migration. Between 2020 and 2022, Miami was a migration magnet, gaining over 40,000 new residents a year. But in 2024, inbound migration dropped by 28%, and more people are actually leaving than coming in. Why? The cost of living, high rents, and insurance sticker shock are pushing people inland or out of state. Inventory is growing too. The number of active listings in Miami rose 51% year over year, while pending sales dropped by 15%. Homes are now sitting on the market for an average of 41 days, up from just 19 days 2 years ago. And nearly 35% of homes are undergoing price reductions, some slashed by $100,000 or more in luxury markets. So, is Miami still beautiful? Absolutely. But if you're planning to buy in 2025, bring a big wallet. With soaring home prices, outrageous insurance, rising HOA fees, and a cooling migration trend, Miami may be glitzy on the surface. But beneath that sparkle, the housing market is feeling the squeeze. Number 8. Sarasota. Sarasota was once a sleepy, artsy beach town. Then came the boom. Between 2020 and 2022, Sarasota's population grew by over 12%, one of the fastest growth spurts in the state. Home prices soared with it, jumping from $280,000 in 2019 to a median of $535,000 by early 2025. But now, the storm clouds are rolling in. This once safe bet in real estate is showing signs of stress, big time. Let's start with insurance. The average homeowner in Sarasota is now paying around $7,400 annually, up 200% since 2020. Some properties close to the water have premiums exceeding $11,000. And it's not just hurricanes to blame, it's flooding, sinkholes, and an insurance market that's losing more companies than it's gaining. Then come the HOA fees. Many gated communities and condo developments in Sarasota are now charging monthly fees of $500 to $850, with some even going above $1,000. These rising costs reflect new state requirements on structural inspections and reserves, especially after the Surfside condo collapse. Associations that used to waive reserve contributions can't anymore. That's adding 20 to 30% increases to fees across the board. Migration is also cooling down. Sarasota's inbound migration dropped by 17% in 2024, and real estate agents are now reporting a sharp rise in price reductions. Active inventory is up 46% compared to last year, and the average time a home sits on the market is now 39 days, up from 15 during the peak. Nearly 1 in 3 listings are cutting prices, some by $30,000 to $75,000, especially in mid-tier neighborhoods. The combination of higher costs and slowing demand is creating the perfect storm. Sarasota still has charm, beaches, and culture, but 2025 is looking more like a reality check. For buyers, that might mean opportunities. But for sellers, the tide is turning, and fast. Number 7. Northport. Northport became a magnet for affordability seekers when Florida real estate started going wild. From 2019 to 2022, the population grew over 22%, and home values nearly doubled, climbing from a median of $240,000 to $460,000. But in 2025, things are looking a bit different. Prices are plateauing, listings are up, and those once affordable homes now come with some serious hidden costs. In Northport, premiums have skyrocketed. The average homeowner is now paying about $6,800 a year, up from just $2,000 in 2020. For homes near canals or flood-prone areas, add another $2,000 to $3,000 for flood insurance. That's nearly $800 a month just for coverage. HOA fees are also creeping up. While Northport doesn't have as many luxury condo towers as Miami, most planned communities still charge $200 to $450 per month in HOA fees, and that's up about 35% since 2021. These increases are tied to rising maintenance, insurance for common areas, and new compliance costs for stormwater systems and roofing inspections. Then there's the migration shift. Net inbound moves dropped 19% in 2024, and construction is outpacing demand. Builders who couldn't keep up during the boom are now offering incentives, think $25,000 discounts or full appliance upgrades, to attract buyers. That's because homes are sitting on the market for 45 days on average, with 34% of listings seeing price reductions. And here's a wild stat. Vacant home inventory is up 60% year over year. Investors who bought second homes during the boom are now bailing or renting at a loss, further destabilizing the market. Northport still shines with nature, space, and slower pace. With costs rising and migration slowing, the city could soon face one of Florida's earliest market corrections. Number 6. Jacksonville. Jacksonville has long been Florida's most underrated big city. Coastal charm, riverfront living, and a booming job market. Between 2020 and 2022, it gained over 38,000 new residents as remote workers, retirees, and families flocked to Duval County for affordability and space. But in 2025, Jacksonville is facing a sharp reality check. The housing market here is starting to buckle under rising costs, shrinking migration, and a spike in unsold inventory. Let's start with insurance. In 2020, the average annual premium in Jacksonville was around $2,000. Today, it's climbed to nearly $6,900, with some policyholders in flood-prone zones along the St. Johns River paying more than $10,000. Flood insurance alone now costs $2,100 to $3,500 depending on elevation and proximity to water. These costs are pushing many first-time buyers and investors out of the game entirely. HOA fees are catching up too. In popular developments like Bartram Park or the Southside suburbs, monthly HOA fees have jumped from $180 to $400, a 120% increase in just 4 years. Several associations have also introduced hurricane reserves, adding extra monthly surcharges to cover future storm expenses. Meanwhile, inventory in Jacksonville has exploded. Active listings are up 52% year over year, while pending sales dropped 18%. Homes that used to sell in a brisk 10 to 14 days are now sitting for an average of 39 days, and nearly 37% of listings have cut prices, some slashed by $30,000 to $60,000. Migration is slowing too. In 2024, net inbound migration fell 28%, with more residents choosing Georgia, North Carolina, or Alabama for better affordability. Even the rental market is softening. Rents dropped 4% year over year, signaling investor hesitation. Jacksonville is still vibrant and diverse, with beaches, business, and culture, but rising costs, slowing demand, and growing inventory could make this metro one of the first to cool in Florida's housing shakeup. Number 5. Deltona. Deltona used to be the affordable escape hatch for folks priced out of Orlando and Daytona Beach. With a median home price of just $235,000 in 2020, it was the suburban sweet spot. But in 2025, this quiet city is now shouting out red flags in the Florida housing market. Home prices have climbed to around $375,000, while incomes haven't kept up, and the hidden costs of homeownership are piling up fast. First, let's talk insurance. Homeowners in Deltona are now paying about $5,900 a year, a 140% increase from just 5 years ago. And if you live near Lake Monroe or in one of the low-lying zones, flood insurance adds another $1,800 to $3,000 annually. Suddenly, your affordable home starts to look less budget-friendly. Next up, HOA fees. While Deltona isn't heavy on luxury condos, many newer developments still charge $250 to $500 a month. That's up nearly 40% since 2021, driven by higher maintenance costs, storm prep expenses, and insurance premiums on community amenities. Residents in once cheap neighborhoods are now feeling the financial squeeze every single month. Migration trends tell a shifting story too. Deltona saw a 25% decline in inbound moves during 2024, and remote work relocations have slowed down significantly. More homes are hitting the market, and buyers are growing cautious. Active listings are up 48% year over year, and the average days on market has jumped from 11 to 37 days. Over 36% of homes are now offering price cuts, some by $20,000 to $40,000. What's even more alarming? The foreclosure rate in Deltona has ticked up 11% year over year, one of the highest increases in Central Florida. That's a sign that rising costs are outpacing what many homeowners can realistically afford. Deltona might still offer small-town peace and spacious lots, but the affordability edge is shrinking. And if these trends hold steady, It could be one of Florida's first markets to take a serious hit in the next housing downturn. Number 4. Cape Coral. Cape Coral was once Florida's best-kept secret, an endless grid of canals, affordable homes, and dreamy sunsets. Between 2018 and 2022, it became one of the fastest-growing cities in the U.S., with over 30,000 new residents arriving during the boom. But here in 2025, the tide is turning. This waterfront wonderland is now flashing big warning signs of a market correction. Cape Coral homeowners are facing an average annual premium of $7,800, up from $2,900 just a few years ago, a whopping 170% spike. In flood-prone zones or homes built before 2000, premiums can shoot up past $11,000. And with flood maps being updated after recent storms, more homes are now required to carry extra coverage. And those HOAs, they've ballooned too. Communities that once charged $250 a month are now asking for $450 to $750, thanks to higher insurance premiums on shared spaces and new structural safety requirements. Some condo owners saw special assessments in the tens of thousands, just to meet Florida's new reserve funding laws. Inventory is up 58% year over year, and homes that once sold in a week now linger for 44 days on average. Nearly 40% of listings are reducing prices, with cuts ranging from $25,000 to over $70,000, especially in mid-market canal homes. Even rental demand has softened. The average rent has dropped 6% year over year, signaling that even investors are pulling back. Cape Coral still offers incredible views and waterfront living, but the costs of staying afloat are rising fast. With higher insurance, climbing HOAs, slower sales, and fewer newcomers, Cape Coral is steering straight toward Florida's growing housing correction. Number 3. Lakeland. Lakeland used to be Central Florida's best-kept secret. With its quiet charm, strategic location between Tampa and Orlando, and a median home price of just $190,000 in 2019. It became a haven for budget-conscious buyers. But in 2025, Lakeland's once affordable appeal is starting to crack under the pressure of rising costs, insurance chaos, and shifting migration trends. Today, the median home price in Lakeland is around $340,000, up nearly 80% in just 5 years. That kind of spike used to be manageable until insurance costs exploded. The average homeowner insurance premium has jumped to $6,400 per year, compared to just $2,200 in 2020. And if your home was built before 2002 or lacks hurricane-resistant upgrades, expect to pay $8,000 or more annually. Flood insurance? Add another $1,500 to $3,000, depending on your elevation and proximity to lakes or wetlands. HOA fees are creeping up too. While not as extreme as coastal cities, many newer developments and townhomes now charge $200 to $450 a month, up from $125 to $200 just a few years ago. These increases are tied to skyrocketing insurance for common areas and new reserve requirements post-Surfside legislation. Inventory in Lakeland has climbed 44% year over year, and pending sales are down 21%. Homes that used to fly off the market in under 2 weeks now sit for 36 days on average. Nearly 33% of listings have seen price reductions, some slashing values by $20,000 to $50,000 to attract buyers. Migration trends are cooling fast. In 2021, Lakeland saw net migration of over 10,000 people. In 2024, that dropped by 27%, as buyers look elsewhere for more affordable or less risky housing. Lakeland still offers convenience, lakeside living, and strong community vibes. But rising costs and a cooling market mean that 2025 might be the year this once booming gem starts losing its shine. Number 2. Orlando. Orlando is known for theme parks, sunshine, and non-stop energy. But in 2025, the only roller coaster that matters is the housing market, and it's getting bumpy. From record-high insurance premiums to climbing HOA fees and a dramatic slowdown in migration, Orlando's housing bubble may be wobbling on the edge. The median home price in Orlando sits around $445,000, up from $290,000 in 2019, a 53% jump in just 6 years. That might have been fine until insurance costs blew up. In 2020, homeowners paid around $2,600 annually. Now, it's about $7,800, with some homeowners paying over $10,000 if their properties are older or near flood zones. The insurance crisis has hit especially hard in Central Florida after a surge in weather-related claims, litigation, and insurer exits. HOA fees are no joke either. In popular neighborhoods like Lake Nona or Baldwin Park, monthly HOA dues range from $400 to $900, often rising 20 to 30% every year to meet new safety and reserve requirements. One condo association downtown recently raised assessments by $12,000 per unit, sparking outrage and resale panic. Then comes the shift in migration. In 2021, Orlando gained over 40,000 new residents, one of the top metros for inbound moves. But by late 2024, that number dropped more than 30%, according to U-Haul and USPS data. The reason? Rising living costs, traffic gridlock, and higher crime rates in suburban fringe areas. Plus, remote workers are now heading to cheaper, less congested states like Tennessee and the Carolinas. Housing inventory is up 49%, and homes are sitting for 40-plus days, a sharp increase from the 11-day average in 2021. More than 35% of homes are cutting prices, with many shaving off $40,000 to $75,000, especially in cookie-cutter subdivisions overbuilt during the boom. Orlando still has magic, but it's getting expensive, risky, and oversupplied. Number 1. Tampa. Tampa was once the poster child of Florida's real estate gold rush. From 2019 to 2022, it added over 50,000 new residents, and home prices skyrocketed 65%, turning sleepy suburbs into hot markets overnight. But in 2025, the buzz is starting to fade. And Tampa now sits at the top of the list of Florida cities most likely to crash first. First, the insurance crisis. Tampa homeowners were paying around $2,300 per year back in 2020. Now, average premiums have soared to $8,200, with older homes or coastal properties climbing well above $12,000. Several insurers have exited the region altogether, and flood insurance is now adding another $2,000 to $4,000 per year, depending on FEMA's updated maps. That's over $1,000 a month just in coverage for some families. And HOA fees. It's getting brutal. In neighborhoods like West Chase and New Tampa, monthly fees have jumped from $300 to $700, with special assessments tacked on due to new reserve fund laws. One townhome complex recently hit residents with a $9,800 special fee, causing a mini exodus. Now, let's look at housing activity. Tampa's inventory is up a massive 58% year over year, and pending sales are down 25%. Homes that once had bidding wars are now sitting on the market for 42 days, and over 40% of listings are seeing price cuts, some by $50,000 to $100,000. Migration is slowing fast. Tampa's inbound migration dropped 32% in 2024, a shocking reversal from its pandemic peak. Locals are getting priced out, and newcomers are thinking twice thanks to rising costs, congestion, and insurance headaches. The rental market isn't helping either. Average rent dropped 6% in the past year, a sign that landlords are struggling to fill units as competition grows. Tampa still has sunshine, beaches, and pro sports, but financially, it's reaching a breaking point. Between skyrocketing insurance, growing inventory, and a softening buyer pool, Tampa may be the first major Florida city where the housing boom goes bust,